the big tech companies are telling us exactly where the economy is heading in 2023. This is by Michael Snyder, Economic Collapse blog. If you didn't like economic conditions in 2022, then you're definitely not going to be pleased with what's coming in 2023. This year we have had to deal with rampant inflation, very sluggish economic activity, and the beginning of a horrifying housing crash, and that has not been fun. But it appears that next year will be even worse. Most of the big tech companies have been reporting dismal numbers for the third quarter, and that is a very bad sign. Even when just about everything else was scuffling along, we could always count on the big tech companies to produce booming numbers, but now that has changed in a major way, and their stock prices are being absolutely hammered as a result. Just look what's happening to Facebook. Overall revenue actually declined during the third quarter, and the other numbers that they just released deeply alarmed investors on Wall Street. While revenue fell 4% in the third quarter, Meta's costs and expenses rose 19% year over year to $22.1 billion. Operating income declined 46% from the previous year to $5.66 billion. Meta's operating margin, or the profits left after accounting for costs to run the businesses, sank to 20% from 36% a year earlier. Overall net income was down 52% to $4.4 billion in the third quarter. It wasn't supposed to happen. Perhaps Facebook should not have spent the past several years alienating a very large portion of their user base. In the aftermath of the announcement of the third quarter numbers, the stock price fell like a rock. Facebook parent company Meta's stock plummeted on Thursday following its announcement of a dismal third quarter. At market close on Thursday, shares in the tech company had fallen nearly 25%, selling for under $98 apiece, a level not seen since 2016. Things got so bad that Jim Cramer felt forced to apologize to his viewers for recommending the stock back in June. In June, Jim Cramer encouraged viewers to buy Meta stock. However, during Thursday's squawk on the street, Cramer broke down. "I made a mistake here. I was wrong. I trusted this management team. It was ill-advised. The hubris here is extraordinary, and I apologize," he said. "Whenever I go to Facebook these days, which is not very often, it just feels so dead. And very few people even want to try the new metaverse that the company has been pushing. The future of the company does not look bright, and one prominent investor is actually recommending that 20% of all employees should be immediately laid off." An investor of Facebook parent Meta Platforms urged CEO Mark Zuckerberg to cut 20% of the company's workforce to reduce its losses ahead of the company's bitterly disappointing third quarter earnings report. Shareholder Altimer Capital Management said in an open letter to Zuckerberg that it was concerned about Meta's controversial pivot to virtual reality, which is bleeding money. If they had made much better decisions, things could have turned out very differently for the company. But now Facebook is in a serious state of decline, and Mark Zuckerberg's fortune is disappearing at a rate that is absolutely stunning. Mark Zuckerberg's fortune plunged by $11 billion after his Meta Platforms, Inc. reported a second straight quarter of disappointing earnings, bringing his total wealth loss to more than $100 billion in just 13 months. Zuckerberg, 38 years old, now has a net worth of $38.1 billion, according to the Bloomberg Billionaires Index, a stunning fall from a peak of $142 billion in September of 2021. While many of the world's richest people have seen their fortunes tumble this year, Meta's chief executive officer has seen the single biggest hit among those on the wealth list. Meanwhile, Amazon has just released numbers for the third quarter that were also quite depressing. Amazon on Thursday posted weaker than expected earnings and revenue for the third quarter and gave a disappointing fourth quarter sales forecast. The stock plummeted as much as 16% in extended trading, which would mark its biggest decline since 2006, should the drop hold up on Friday. Of course, Amazon is in much better shape than Facebook is. Revenue is still growing. It's still just not growing as fast as Wall Street expected. Several other big tech companies have also reported disappointing numbers for the third quarter. For example, Google did much more poorly than expected thanks to a decline in revenue at YouTube. Ad revenue has been a particular point of contention for companies like Google parent Alphabet, which saw revenue for its video streaming platform YouTube fall for the first time since it began reporting the value in 2020. According to the Wall Street Journal, overall Alphabet saw a 26.5% annual decline in net income to $13.9 billion in the third quarter, despite consistent revenue growth in its cloud computing division, which saw an annual gain of 37.6% to $6.9 billion. All of the big tech stocks have been falling for quite some time now, and at this point the six biggest have collectively lost a whopping $2.5 trillion in market value. This year, Meta, Netflix, Amazon, Microsoft, Alphabet, Apple have lost $2.5 trillion in market value combined, Reuters reported on Wednesday. The tech giants were on the cutting edge of the stock market boom on the way up, and now they're on the bleeding edge of the crash on the way down. But of course, the housing industry is in far worse shape than the tech industry is at this point. This week, mortgage rates jumped to above 7% for the first time in 20 years. Mortgage rates rose again this week, topping 7% for the first time since 2002. The 30-year fixed-rate mortgage averaged 7.08% in the week ending October 27, up from 6.94% the week before, according to Freddie Mac. A year ago, a 30-year fixed rate stood at 3.14%. The last time the average rate surpassed 7% was in April 2002. Higher mortgage rates are driving countless prospective buyers out of the market, and this is going to drive down home prices dramatically. In fact, one economist is now projecting that they could fall by as much as 20% next year. Home prices are already falling at the fastest rate in decades as mortgage rates march higher and could tumble another 20% next year, according to a noted Wall Street economist. Ian Shepherdson, the chief economist at Pantheon Macroeconomics, said in an analyst note published last week that there is no floor in sight, quote unquote, for declining home sales, with mortgage rates approaching 7% for the first time since 2001. He anticipates that home prices will plunge by 15 to 20% next year. Let us hope that doesn't actually happen, because that would be disastrous. And we already are seeing home builders get absolutely monkey hammered. Housing construction and renovation plummeted 26.4%, the sixth straight quarterly drop. Fed rate hikes have driven up mortgage rates, pummeling home sales and building. The months ahead do not look very promising at all, but none of this should surprise any of us. Our leaders have been making very bad decisions for a long time, and now we all get to suffer the consequences. This is by Michael Schneider on Economic Collapse blog. He says, "My name is Michael. My brand new book entitled 7-Year Apocalypse is now available on Amazon. In addition to my new book, I have written 5 other books that are available on Amazon, including Lost Prophecies of the Future of America, The Beginning of the End, Get Prepared Now, and Living a Life That Really Matters. When you purchase any of these books, you help to support the work that I'm doing. And one way that you can really help is by sending digital copies as gifts through Amazon to family and friends. Time is short, and I need help getting these warnings into the hands of as many people as possible. I've published thousands of articles on the Economic Collapse blog, End of the American Dream, and the Most Important News, and the articles that I publish on those sites are republished on dozens of other prominent websites all over the globe. I always freely and happily allow others to republish my articles on their own websites, but I also ask that they include this about the author section with each article. The material contained in this article is for general information purposes only, and readers should consult licensed professionals before making any legal, business, financial, or health decisions. I encourage you to follow me on social media, Facebook and Twitter, and any way that you can share these articles with others is a great help. These are such troubled times, and people need hope. John 3:16 tells us about the hope that God has given us through Jesus Christ. For God so loved the world that he gave his only begotten Son, that whosoever believeth in him should not perish, but have everlasting life. If you have not already done so, I strongly urge you to ask Jesus to be your Lord and Savior today. This is by Michael Schneider on Economic Collapse blog. Please leave your comments. Thank you for your support. Kindly support my Patreon account. The daily posts are 5 videos daily, and they are totally different from what I have on my YouTube channel. Thank you so much for your support and that you find all my content so interesting. You'll find the Patreon account details in the description box below.